Good morning. This is Anthony Parent of IRS Medic. Today is August 30th, and we're going to be talking about a big story that's going on this week that Kamala Harris is threatening to tax unrealized gains. And, right now, social media is in an uproar. And we have our special guest with us today. I want to welcome aboard the great John Richardson. John, thank you for coming to us from Canada, along with Keith Redmond, the advocate too. The advocate for and consulate to the American overseas. Thank you both so much for joining me. And I want to launch into sort of this discussion. And I might actually get a little bit emotional today because this is sort of, if you ever have that dream where you're screaming to people, there's a danger and no one listens to your voice. That's my nightmare that I live every day because people don't understand what the tax code is. And the reason why is because the tax code is inherently complicated. And I get it. We don't want to look at it. And it's incredibly invasive. We don't want to think about it. We want to put it away. We want to just put it away, buy our ransom off for the year and get as much time during the year. We don't have to think about it. But guys, that comes with a terrible, terrible consequence because here we are in the most ridiculous situation we could possibly find ourselves in. And let me explain what's going on. This is the thing you need to know about the US tax system and how taxes are impacted. Everything from the inception of this country, everything terrible the IRS and all the precursors do to tax people, they impose first on the politically powerless. Okay. Now, number two, right now, one of the greatest politically powerless people are those who actually work for a living, but also US expats and those with foreign incomes and earnings. They are politically powerless, intentionally so. Congress will always pass laws to say, hey, we need to raise revenue. Okay, let's find a way to tax some foreign income because you know what? They're going to make money overseas. They're going to live overseas. We have a right to punish them. And that's the belief. And Americans just let it happen. So what do we have so far? We have subpart F, guilty, and the exit tax all have aspects of being taxed on income never received. Now, one particularly nasty tax, that a tax on retroactive income, not actually received, is the transition tax. And that was a one-time tax passed in 2017 by President Donald J. Trump. So Donald Trump passed a retroactive tax on income. It already has been done. What Kamala Harris is proposing is nothing new. Of course, it's a broader scope because that's what they do. They try it out a little bit. They got their ruling, and now they're going after everybody, right? Now that's what they have. Because now this is the thing in the transition tax, because there was no realization, most people thought, and I was one of them, thought the law would be unconstitutional. And this exact issue was brought up in oral argument. Justice Thomas, who was not a fan of it, inferred, being his questioning, that the tax actually should not be upheld. Sorry, that was my typo. The tax should not be upheld because it would lead to a potential tax on unrealized income in real estate. Now, the Solicitor General, she dismissed Justice Thomas, claiming it's already possible to tax unrealized gain. And that really, her argument was like, look, it's tax. And the U.S. can tax anything for any reason at any time it wants to. Now, the transition tax was upheld. It was actually upheld. It is currently the law of a land that a retroactive tax on income never received is constitutionally permissible. And the reason why it happens is because our tax code does nothing but divide us. No one is treated equally. That's why it is so complicated. In order to screw over people in unique ways, it needs to be so vastly complicated and ununderstandable. Now, social media is in an uproar that Kamala Harris is threatening to tax unrealized gain. Sure, but guys, it's nasty. Don't get me wrong, it's nasty. But why? Why is this unreasonable? Because if we were paying attention, President Trump was allowed to retroactively tax income received in 2017. So why can't Kamala Harris do it? Now, so maybe here's the thing, folks. Maybe here's the thing. Maybe all Americans need to wake up, and start paying attention to how our tax system is weaponized against us, because here it is. People are afraid of a dystopian future that's been here. This terrible thing you're afraid about, it's already here. The battle has already been lost, folks. It's over. because we allowed it to happen because we were not paying attention to tax because it's just too complicated. So with that introduction, I want to turn it over to Keith Redmond. Keith, good morning to you, sir. What do you think of this? What do you think of this here?
I'm not shocked. I'm not shocked at
Yeah.
all. I mean, this is we see it coming, and
Yeah.
I think the Supreme Court ruling has just opened the floodgates. So
Now,
this is just
yeah.
the beginning.
And here, and you know what, and part of what we're going to be talking about today is, how things are already taxed and really the path forward. But in this case too, the tax on unrealized income is also going to affect those overseas tremendously. And for that, I want to turn over to John Richardson. So, John, not only is this retroactive tax going to affect every American terribly, but it will actually affect those overseas even worse. Is that right?
Well, there's absolutely no question that any tax change in the United States or any negative tax change has a very high likelihood of, I would say, probably about 95% of affecting Americans abroad more. And the reason for this is that the theme of your opening discussion, Anthony, is the creation of income for tax purposes when there's been no actual receipt of anything, right? I mean, that's what we're talking about
Yeah.
here. And I mean, the first point I would make, generally, this is a problem for all Americans because of what is actually is an attack on the ability to independently compile resources for retirement and that. In other words, if there's a toll as your assets grow, every year or something, I mean, obviously, you're not going to get anywhere. But, every country is free to have whatever tax policy it wants, even bad ones. Uh, but the problem is that when it comes to Americans abroad, not only do they have to endure this problem from an American point of view, but they're very likely going to be subject to double taxation because if we take a very simple example of the most basic example I can think of would be a stock portfolio. And let's say it goes up, $100,000 in a year. Actually, I'm going to give a smaller number, 10,000, because I think more people could relate to that. And if you're an American citizen living in wherever, and you have to pay a tax on that, okay, now bear in mind that you're going to have to pay a later tax in the other country, right? When that's finally distributed. So
Right.
what these things mean for Americans abroad is almost certain double taxation, almost certain. And by the way, the problem is even compounded, or the injustice and absurdity is compounded by the fact that, as always, to some extent, it matters what country the American abroad lives in. The US-Canada tax treaty actually has a provision in it for taxation of unrealized gains, where, for example, the person living in Canada could elect under the treaty to at least have the gain taxed at the same time in Canada to avoid double taxation later. But compare that to an American living in Australia, where there is no such provision, or at least I don't think there's such a provision, or a treaty where there isn't. And that person would not even have that opportunity. But make no mistake about it, not only is this, in my view, extraordinarily bad tax policy for the people of America, okay, who are trying to, live independently and doing their best to get ahead, but it's compounded dramatically for Americans abroad. And, you know, all roads lead to renunciation. By the way, a lot of the discussion I notice on social media is, well, these are proposals. They don't have any chance of becoming law. Well, that's the first thing. The second
Yeah.
thing, well, this only applies to high income people. And it's a policy that has to be stopped because, first of all, you're a lot younger than I am, so you don't remember the alternative minimum tax. But the alternative minimum tax, Anthony, was initially intended to apply to a very small number of people. It was a class tax that, like all class taxes, eventually became a mass tax. So no question about it. The way tax politics works in the world generally, but you see it more clearly in the United States, is you bring out an obnoxious tax and make it apply only to a small number of people. And the majority says, "Oh my God, thank God I'm escaped. It didn't apply to me." Well, that's today. Just wait until tomorrow, right?
Yeah, I mean, right, and that's the inception of the income tax from 1913. It was promised. Look, this original thing that we're all subject to was promised just to be a wee little tax on the wee little wealthiest, and it would pay for everything. We'd have social utopia. That's the original promise. So it's always a lie. They always lie. They just creep it in there, and then like they let it in. Now they go through like, okay, how do we administer it? Okay, now let's deploy it on a widespread scale. It's a divide and conquer. The U.S. tax code is nothing. And this is really what I think about. We're supposed to live in under a constitutional republic where there's like some sort of degree of equal protection under the law. And if you think about it, as I was mentioning earlier in my introduction, that the U.S. tax code is so complicated because it has to be nothing but discriminatory. Your life circumstances, are you discriminated on the basis of your citizenship? Absolutely, absolutely. Are you discriminated based on your marital status? Absolutely. Are you discriminated whether you have kids or not? Absolutely. There's so many discriminations on when you are discriminated on by where your money is and how it's made. There's no question about it. And it could be the same type of income, but where it's made, how it's made. Oh, we got to tax that totally different. And that's again why we have a U.S. tax code that can actually never be known, because all it can do is discriminate, and it has to fine tune and get everything down to each little granular thing, then subdivide from there and subdivide from there, because it's nothing but something that wants to destroy us. And that's the thing that we should be paying attention to. I want to go over now, John, because you sent over, yeah, go ahead, John.
I mean, it might be worth putting that in a slightly different, actually complementary way, not
okay.
so much.
All right, that's what we're here for.
Let's put it this way: isn't every carve out a form of discrimination?
Yeah. Every carve out is a form of discrimination, and the U.S. tax code is nothing but nested carve outs within carve outs.
Well, in other words, the U.S. tax code is nothing but a massive form of discrimination, where really what's happening is that people live to try to avoid being on the obnoxious end of the discrimination, right? And as long as it doesn't affect them, they don't. Partly they don't care that much, but partly it's so complicated that very few people even have the tools and vocabulary to even discuss this, right?
And you know what? That might be the real perfect segue into the video that we're going to discuss. And I think that's really my problem with it, is I'm looking at everyone's reactions to this, and they're so comically uneducated about what the reality today actually is, that they're teeing off on, and I'm watching this, and everyone's being, hard on Kamala's advisors. Let me get this up here. I'll get this up right here, and we'll start. We'll get this up. This is the one. Let me get the a little bigger there. There we go. So we can start playing this here, and I'll stop it as I deem necessary, because I generally freak out while it's going on. So I've had to calm down a few times after I've done that.
Unrealized gains, taxing unrealized gains just doesn't seem fair in any sense of the word. In the very best sense, if you are taxing unrealized gains, all you're doing is pulling forward the taxes that would be paid later when someone actually sells the stock.
I think that this reaction to unrealized gains is a little funny, given that I bet that the majority of people watching right now are already paying a tax on unrealized gains. It's called a property tax.
This is a stupid
When the value of your home goes up,
It's a use tax.
when the value of your home goes up, you pay higher taxes, even if you don't sell your home.
Well, and this is what I would say, is that the proposal doesn't even know the current law either. He's right. We already tax unrealized gains, but he doesn't know how. So he's scrambling here, trying to defend his position by applying it to a property tax as well, which it's not an income tax. So looking for gains isn't the relevant inquiry. It's whether do you own the property and what's it worth. That's what you're concerned with, and what's the tax rate. So gains or whatever isn't a relevant inquiry, and then he's just sort of soiling himself here as he scrambles. We'll let him suffer a little bit.
If your home never moves the way the stock moves, the way something
that's always
else
the go-to answer.
It's also, property tax is a use tax. You're paying for the schools, you're paying for emergency services. Those are things that make absolute sense.
And sure, and all the revenue that comes in from these unrealized gains taxes and the other taxes in the Harris plan are going to go to creating what she calls more opportunity. It's to make sure that every newborn born in this country gets $6,000
using the services.
Well, look, you're arguing that this is some sort of foreign concept that's completely unknown in the U.S. tax code.
It's probably unconstitutional. It's probably.
You hear that? He says it's probably unconstitutional. Sorry, bud. Sorry, but it isn't. The Supreme Court already ruled. You should have been paying attention. I noticed you guys didn't talk about Moore versus U.S. because it was what? It was involving a foreign taxation. So, hey, that's not going to get interest. But guess what? Too bad. Too bad you weren't paying attention because it's already here, buddy. So, all right, let's go. Let's continue on this.
Anthony, it was never in anyone's intent.
We're moving on. Pause that for a minute.
Yeah, you bet.
So what the guy is saying, right, is that there is a precedent for taxing where there's no realized gains. And the problem is he's using a different context, right? But property tax. But that point is correct, right? I mean, he's trying to divert the thing from income. But the Moore case, although it upheld the transition tax, right? Remember that it upheld it on the basis of an assumption of realization. And I would say that the court actually left the question open of whether a pure non-realization event, if there's no realization anywhere, is taxable. Remember that Justices Thomas and Gorsuch, flat out ruled against the transition tax. And Justices Barrett and Alito seem to leave open the possibility that realization was required. The only judge that flat out said realization is not a requirement was Justice Jackson. So I agree with you that it's an uphill battle, but I think it would be bad to sort of accept the idea that the Supreme Court has ruled for all times that a tax on unrealized gains is constitutional. And after the decision came down, a few, at least, even tax academics, wrote small articles and made statements that the 877A exit tax might be subject to constitutional challenge because that's a pure example of no realization at all. Anyway, more than we need for this conversation, but I think it's important to not, sort of buy into the idea that the decision in Moore foreclosed the possibility of constitutional challenge on all these kinds of taxes.
Thank you, John. Yeah, no, and thank you for clarifying that point, because that is not what I would want to say. My point would be, well, now the Solicitor General.
Oh, absolutely.
Now, if she could put in her brief,
hey, is clearly your enemy. The government's view is that anything is taxable. There's no.
In her view, while not expressly what she wanted, her view was upheld. So she can come and say, no, we don't even need it. We can just tax anything we want at any time. And that's the attitude that I would expect the government to follow. And if you listen, and it's really one of the most frightening things, to listen to that oral argument is truly, truly frightening, because there's really, the government believes there's no limitation on how they tax what they tax. That's the truth. Now, will the Supreme Court always rule that way? Don't know, but we lost one. The result in Moore wasn't great. And it was terrifying it's really terrifying, the result in Moore, about how much, whether or not the Supreme Court actually understand the issue. And it's kind of worse if they actually understood the issue. It's even worse, the decision they made, but maybe they didn't even understand it, because again, it's tax. And again, it's designed.
They were clear. I mean, you could tell just from the oral argument that Kavanaugh regarded his job as being to make sure the tax system doesn't get upset. I mean, he said it flat out.
All right, let's finish up this abomination here. All right, let's do this.
It's not income. It's not an income tax.
And it's never going to happen, probably.
I like that qualifier. There you go, the probably. There you go. That was probably the most valuable qualifiers of all time. Will never happen, probably, yeah, because we don't know. You know, because some, and as John said, some we have more that did uphold a totally unconstitutional tax.
Well, when he says it won't happen, that means the government won't try to enact it. You mark my words, they will.
Oh, they will.
Absolutely, they will. There's no ifs, ands, or buts about
it. Why did the government, and why did and honestly, the Solicitor General, I believe, was a Democratic appointee. Why did why you got to wonder, why did a Democratic administration fight tooth and nail for a Republican proposal? And the answer is because it expands the power of the federal government, and that the parties work in conjunction to do the exact same thing. So, oh yeah, all right, Trump did this. He's a bad guy, but I got to tell you something. His tax is wonderful, and we got to do it. Yeah, we can't stand everything about Donald Trump, but I'll tell you what, when he retroactively taxes income never received, that's a good thing. So that is where we find the uniparty. You know, we'll always find these superficial differences on various policies that don't really affect our lives. But the number one policy for economics, the monetary policy, we have no control over that. We're not allowed to. The Federal Reserve just does whatever we want, and we're not able to ask questions. And then the IRS, which disguises itself as a revenue raising agency, it's not. Our money doesn't go overseas to fund wars that we don't want. Our money's just destroyed. The money to fund wars overseas to destroy other people comes from the Federal Reserve. So we don't even get a say in where the money goes because our money's just destroyed. That's what the government does. And so here's the problem that the government has, and this is why they got to go this way. The only cure to inflation is reducing the money supply. And the way that the money supply is reduced is through taxation. The money is destroyed. So with record printing money, what has to occur to avoid hyperinflation? Only one thing. A lot of money's got to get destroyed. Well, geez, a lot of people are sitting on all that equity in their house, and the government wants to unlock that equity by claiming you have a gain and now forcing you to find a way to pay the tax when you don't have the money to pay the tax because you didn't sell anything. You don't have it. It's a fictitious gain. So there's only one thing they could do is they're going to go after real estate, and they're going to be going after retirement accounts, because where else is it? Where can the government make the big gains by taking money anywhere else? It's in real estate. That's what they're going for. And again, that's why Justice Thomas saw this and he asked this question specifically on real estate. And it's a frightening answer the government gives.
So, look, this stuff's really complicated. And for listeners, I just want to interject with something really, really simple, okay? The direction of the U.S. tax policy is clearly going on imposing taxes on fictitiously created income you never received. This is a terrible problem for all Americans, but for Americans abroad, it becomes completely untenable, because you're absolutely going to be subject to double taxation in any country where the tax is based on realization rather than fake realization. Okay, I think that's an important message for the listeners here. And, you think this isn't coming. Well, the only thing you're betting on is time. People laughed about the exit tax proposal in 1995, right?
Oh, I laughed about Obamacare. I said that would never happen.
Yeah. So, American abroad, obviously do what you want, okay? But the Harris campaign, this podcast, the video that we just watched, are giving clear and accurate warnings for anybody who cares to listen. Rather than worrying about your losses of renouncing U.S. citizenship, maybe you should thank God for that. If you're a dual citizen, that you have the privilege of renouncing U.S. citizenship for now.
Wow. John, I didn't think about that one because it's right. I say our dystopian future is here, but that doesn't mean it can't get worse. Right? Doesn't mean it can't get worse. Oh, great comment coming in from Trevor. Thank you, Trevor. Thanks for joining us today. Yeah, SCOTUS didn't want to upset the government's tax revenue stream instead of ruling the correct way. I mean, that's really it. They're on the same team. Trevor.
Crystal clear. Crystal clear. He even asked the Solicitor General which ruling she preferred at one point. Getting to the same result. There's absolutely no question about it.
And here's another great comment right here. Right. Just how the government started taxing fictitious profits of tech companies over the past couple of years. No, we're talking, and these layoffs happen, interest rates happen, and it's really our tax code is so destructive. And again, the reason why it's so destructive is because it's intentionally complicated, so you don't pay attention. That's why we're here. That's why we're here. You watch us to make sure you're like, look, they're trying to fool you. They're trying to trick you all the time. But if you know how to read what they're writing, you can see what they're doing, and you know what this is all about. And it's one of the greatest disasters of all time. Now, John, maybe this would be a good time to talk about the ways in which this tax on unrealized gains would affect those overseas worst. You want to go through that right now? That might be a good time to do that.
Sure.
All right, great, fantastic. Yeah, and again, look, maybe you're not maybe you're a U.S. person and you don't have anything overseas, but you gotta pay attention to what they're doing because it's gonna happen here too. The same elements apply when you see these proposals. And so let's get up John's. Let me get up John's. John has a great blog article we're going to discuss here. Let me get that up here. And here we go. All right. So this is an article that John wrote. And this was based on the Biden Green Book, which Kamala Harris has adopted as her platform for her presidential campaign. So let's get into this right away, John.
The other one, I gave you two links. The other one might be better.
Oh, okay, this one?
Yeah.
That's the one I meant to grab.
Right.
Yeah, this is the one. Yeah, this is.
Okay, look, first of all, I wrote these a long time ago.
Right, look at that. Yeah.
These Harris proposals are, really endorsing the Biden Treasury Green Book, which is the administration's tax proposals. And obviously, those are going back in time, but they haven't changed significantly, okay? And there's a lot in it that's really, if anybody cares to actually read it, really foreshadowing major changes in the way the U.S. tax system is designed to operate. And the primary thing I would say is that it's a clear proposal to move away from realization being a requirement for taxation. Okay,
and that's for everybody, and that's for everybody.
Yeah, and we can see this, in things like, GILTI, for example. Of course, they would argue that, well, the foreign corporation that we don't have jurisdiction to tax under the treaties has income, et cetera. But all you need to do is look at, these proposals that, although they're in their infancy, it's very clear what they're based on is the idea that people should be taxed on gains even if they're not realized. Now, about 10 years ago, as you know, I live in Toronto, Canada. The University of Toronto Business School, they have these sort of lunch speakers from time to time, and they had Larry Summers one day, the former Treasury Secretary, and I think President of Harvard. But he was talking about this, and the very first thing he said was that, he was talking about wealthy people. And he said, these people never paid tax on the increase in the value of their assets. Yeah, he said that. I remember this so clearly, going back years and years ago. So this is really, sort of the Larry Summers view of the world, I think largely. But, in a certain sense, every country is free to have its tax policy. But when you have one country in the world exporting its tax policy into other countries and imposing taxation according to these rules on people in other countries who are also subject to a second tax system, okay, the result is absolutely disastrous. Okay. I mean, this is not, anymore the problem of, do I get a tax credit or not? This is fundamentally about creating conditions of absolute double taxation all the time. And notice that this is not part of the narrative at all, right? What this means is
Well,
as long as U.S. citizenship taxation continues, you're going to have this problem, right?
and you know what? I want to ask a question to Keith here because we're having a lot of new viewers today. People who are interested, not people who are from domestic. So, Keith, I realize as we're going along here, there's something huge that we might have left out for our audience who might be like, what are they talking about? What are they talking about? So Keith, what's one of the biggest surprises? One of the biggest surprises when someone who lived in America their whole life, goes over, moves their family, starts living, working overseas. What's one of the biggest surprises they find out?
One of the biggest surprises they find out is that they actually have to do U.S. tax filings because of because of citizenship-based taxation. That's a big surprise.
Right. Right.
Is that the answer you're looking for?
That is exactly the answer. Yeah, that was exactly the answer I was looking for, Keith. Thank you very much. And that's and one of the and so that
if I may
go ahead.
And if I may interject, it's not necessarily people who have left the United States and moved overseas.
Right.
People who have never lived in the United States and they realize I'm supposed to be filing U.S. tax declarations.
That you subject to worldwide tax jurisdiction. So, I mean, how many levels of terrible do we have? Okay, can the United States of America tax income outside of its jurisdictional boundaries? The answer is absolutely yes, no problem whatsoever. Yeah. Can it tax someone where they're not inside the U.S.? Yes, they absolutely can. No questions about it. So we're already at this point where it's sort of outrageous. Well, why is the U.S. taxing this worldwide income? What gives them the right to do so? Well, they don't have a right; they have the power. And again, the U.S. dollar is somewhat of the reserve currency for now. And if you have the reserve currency pumping all this money, well, you have to have a worldwide taxing system to pull that money out of the system. So again, hyperinflation doesn't occur. So I think that's one of the things that we need to understand is like, right on top of all this, we have this citizenship-based taxation, which surprises and harms people with various reporting requirements that are nasty, but we're not done yet because there's more terrible things happening. So John, let's get to the rest of this here. All right. So, okay. So here's one way it's going to do it here. Raising the corporate tax rate to 28%, creating some part of income and making more Americans abroad guilty. So how's this going to work?
Yeah. So this, I think, is a perfect example of how this type of stuff hurts Americans abroad, without any awareness that they even exist. So the basic idea is that a U.S. citizen living outside the United States who is a shareholder in a controlled foreign corporation, for most people contextually, that just means that they've incorporated a business to, run some small business abroad. That's, a little more technical. But so chances are overwhelming, I think, a guarantee that in your country of residence, that for taxation purposes, there's separation between the corporation and the individual, right? So, in your country, money that's earned by the corporation isn't taxed to you until you take it out. But what the guilty rule is a rule that says, these goddamn, Americans, including Americans abroad, and what are they doing running a business, creating a corporation where they live? And, we find that so offensive that, to get around this, what we're going to do is we are going to require those Americans abroad, if they haven't paid that money out to themselves, if they leave anything in the company, then basically we're going to make them put what they left in the company on their tax return personally, even though they never received it, even though they never realized it. See, okay, and pay tax on it. Okay, so that's what guilty is. Now that's pretty bad, but there is a carve out to it, an exclusion, and it's called the high tax exclusion, which basically means this: that by the way, any tax people listening, I understand this is an oversimplification. Relax, okay? But what it means is that if the corporation is taxed in the country of residence, right, where it was incorporated at a rate of 90% or higher, that means that, well, that income, we're going to exclude it from the guilty hell, and you just continue on your merry way, right? Now, at the present time, the U.S. corporate tax rate is 21%. 90% of that is 18.9%. Okay, so at the present time, if the money is taxed in the other country at 18.9% or higher, you escape guilty. But what if the U.S. corporate tax rate goes to 28%? Well, 90% of 28% is a little higher, isn't it? I think it's 25.2%. So you see, by raising the U.S. corporate tax rate, notice how it sucks a whole bunch more people, unsuspecting Americans abroad, into the guilty net, right? And, and this doesn't even, by the way, I'm not even going to get into the podcast today for, the changes that are coming in terms of how guilty is calculated, et cetera, et cetera. I think that's enough to make the point, right? That, for people who think, many people would say, well, gee, what are you talking about? You're a complete moron, aren't you? I mean, how in the world can anybody say that, well, if the U.S. increases its tax rate on domestic, how does that affect you as an individual? Well, just one more person doesn't understand how this flows through, right? Serious problem coming.
Yeah. I had a point here. Now you did cover number 2 in that, what you just said too, right? You just covered number 2 in the guilty, because that will do it as well.
Yeah. We can just bring the two of them together. That's fine.
Yeah. Okay.
This is the flow through of the problem, right? There are other things in it that, for example, this one, reducing phantom gains and losses. Now, this is interesting. This is actually would be a help to Americans abroad, right? Because of the phantom gain problem, right? Yeah, more fake income, right? In other words, you sell a house where you live, you haven't made a profit, okay, but somehow because of exchange rates between the currency and you've made a profit. This is designed to mitigate that problem to some extent, but what it's really doing is reinforcing the concept of citizenship taxation, isn't it? It's more of this, well, we're going to make the prison of citizenship taxation a little better, right?
Isn't that nice? Yeah. Strengthening our friend Fatka. Oh, that's wonderful.
Let's gloss over that one.
All right, we'll just move that.
This is for people who are going to renounce U.S. citizenship without filing an 8854. This is a shot across the bow. Next.
Oh boy, and that we saw in the Roger Ver indictment that it's terrible what they did in that case.
Yeah, go back to the very top first before we get into the last one.
Right here.
I thought I added something, didn't I? Didn't I say at the top I was adding something?
Oh, yes.
7th way.
Yep.
So yeah, I think this is actually the most important one. I don't know why that was an afterthought or what I was doing. Who knows what I was doing or thinking or not? But obviously, the treatment of gifts. Now I see the treatment of gifts as capital gains. Now this is interesting as well. The proposals include, the present time in the U.S., right? You make a gift, you don't have to pay a tax, right? As long as you file a gift tax return. Yeah, I mean, as a general principle, okay. But what they're doing here is proposing to turn gifts into taxable events, treating them as dispositions at fair market value, right? So let's say that now, as always, they temper this with carve-outs to make it seem like it's not that serious, but it's the principle that's the problem. Foreign American abroad, okay? I mean, maybe it's good, maybe it's bad tax policy for resident Americans, but let's imagine for a minute that you're living in a country with a basic tax system and, without having gift taxes or what, I mean, it's hard to say. But the point is here that what this does for Americans abroad is create a U.S. taxable event Okay, got to pay a capital gains tax on a gift you make to somebody, when that may or may not, and more than likely will not be true in the country where you live, right? So, in other words, this is one more U.S. tax.
Oh, right. Okay.
Right, that will exist for Americans abroad that may or may not exist in their country of residence. But if it did or does, it's also very likely to create a timing difference, right? So that there's no
Right.
Foreign tax credit stuff. The other point I would
so double taxation. So, and I think it's a horrific treatment of gifts as capital gains is horrific for every American. But again, it's
all these things are horrific for every American.
Every American is horrific for, and this is just exactly the extra terror for those overseas. That's really our common theme that we find. All right, so we'll get down to all right. So we'll go back down to the bottom here to number 6.
Yeah, now this is interesting. Okay, this is the continuation of a proposal that actually began during the Obama Treasury Green Books, which was a recognition of the problem of certain Americans abroad who lived many years outside the United States, whatever. And this is a vague, and this this could be good, but it's certainly going to be divide and conquer. This is a proposal to identify certain Americans abroad based on, net worth and based on how long they've lived outside, this sort of stuff, and possibly find a way for them to leave the U.S. tax system, et cetera, without the compliance and the exit tax stuff. Now, again, I think what's interesting about it is that it's there at all. However, I'll tell you what I think about this actually. Okay, I think this is a continuation from the Obama years, but I think they've effectively done that in the 2019 relief procedures for former citizens already. Okay, and I would not expect any further relief in that regard at all, under the existing laws, etc. So, but anyway, Anthony, look, the point is that when people think about taxation, everybody, including Americans abroad, they always think about the here and now, right? They don't think about the future. They don't look at, they tend to look at specific proposals and carve-outs without paying attention to the general theme behind the overall proposals. Okay? And the general theme, I mean, this is just plain as day, for anybody who's willing to just pause for a minute and look at this, right? The general theme is that the U.S. wants to add to taxation and realization the taxation of certain things when there has been no realization, which of course is nothing but a mechanism to erode capital for retirement, etc. But far worse for Americans abroad who have to deal with that and then deal with later taxation on the same stuff in their country of residence. From the point of view of Americans abroad, what this actually is, I mean, it's unbelievable. It's reaching into other countries, right? Now, remember that for Americans abroad, capital gains are actually sourced to the country of residence, okay? Effectively resourcing and creating gains, right? I mean, this is unbelievable. And,
Well, I would say this is where I would say to add on to you about how obvious this is. And maybe Keith knows of somebody who would disagree with this, but who in the world, can you think of the person in the world who would vote for the U.S. tax code as it is, Keith?
Who would vote?
One person. I want you. Yeah, one person in the world. Can you name one person in the world who would say, you know what? I have read and I have understood Title 26 of the U.S. tax code, along with all of its regulations and interpretations and procedures. And I have said, yes, this is what I want. This is what I want for myself. Is there anyone you know? Because look, you're a worldly guy, Keith. You're a worldly guy. You run a lot of people. So have you run into that person who says, yes, this is what I want?
Well, the way you framed the question, I would say no. But if the question wasn't framed that way and it's just where they are ignorant on the U.S. tax code, and I don't mean that in a pejorative sense,
right,
but just not knowing the inner workings of the complications of the U.S. tax code, I can see some people who would just say, sure, why not? Because it's not causing me a problem.
Right.
And my response would be, yet.
Yet. That's the best answer yet, because it's coming for you. And when it is, you are going to be surprised when you're talking to a tax attorney like me. And I said, yeah, okay, here's sort of the estimated cost to fix all this. You're going to be like, what? I'm like, yep. Guess what? This is the IRS we're dealing with. It's not easy, and they've only gotten worse. So it's one of these things that will come for everybody. It does knock on your door. Typically, it's when you have a life change. That's when the IRS is coming with some sort of IRS problem, divorce, death, sale of a business, something bad happening. That's when the IRS also springs into action to make sure your bad time becomes even worse. And that's the problem we have. We live under this situation where people are only looking at their little bit that affects them. Like, okay, I only have this little bit of, and my taxes are withheld. Okay, it's not that, hey, taxes are the price we have to pay for civilized society. Not that our tax system is the reason why we're not civilized. I mean, we're not civilized whatsoever. Give me a break. So we have this. That's go ahead, Keith.
There are people. There are plenty of people who'd vote for it, actually. Okay, and these are people who are afraid that change would hurt them more than, the continuation of the existing thing. Very interesting.
Well, John, how do the people vote for it, though? How do people vote for it?
Oh, by not. They vote for it by acquiescing in it, right?
Right.
Right.
Well, no, and I guess my question is
buying into sound clips that are coming out of the hair. By the way, to be clear, I'm absolutely certain that Harris has no understanding of any of this. Okay, like zero. Okay, this is just a bunch of sound bites.
Oh no, and I would say this, that no president understands what's in the tax code. No, and that was my point earlier. No one did vote for this because no one could vote for this. We are supposed to live in a representative republic where our officials, we give our authority to vote and decide on things to people so that they can go up and down to make it a little easier in life. However, we know for a fact that these bills are so complicated, no one understands them, and that the way that they're presented, hidden in other areas of omnibus bills, that no one understands it who's voting for that. We know that. We know our representatives don't write the tax laws. We know that. They just come magically from someplace. Who's the constituency who want it? Well, we're not going to tell you that, but here it is, and then they're told on what to vote for. They have no idea what they're signing into law, and the Supreme Court knows this, right? It's a known thing, and we're actually here to believe that the Supreme Court has some sort of review over some sort of judicial review over unconstitutional things. Well, the very fact that no one even reads and understands these laws, we don't have it. We don't have it, and the Supreme Court just doesn't understand that, though. They don't live in reality, because their job is to be on the same exact team. There is no checks and balances. There's no checks and balances between any of the branches of the government. And the government has removed any checks and balances from the states to the government. And the government has removed any checks and balances from the people. So the government is operating outside of us. And that is the explanation for all this crap, because there's no one in the world who would say, yes, I want to be subject to this. This is exactly what I want us to be subject to it. Because again, if number one, the only reason they would say yes is they're ignorant. They haven't even read it. And most people haven't read it. And number two, no one wants to be subjected to this. There's not a constituency that says, I want you to ruin me. IRS, I want you to ruin me if I don't do something right. I want you to make, and then you know what? And if I don't like it, I want you to make it impossible for me to leave. I want to make it impossible for me to challenge anything. I want to be shut out of the political process. So that my vote absolutely means nothing. No one in the world would ever vote for that, but it's most certainly what we have. And the disaster of our lack of representation is reflected, I think, really reflected best in our tax code and all of its ancillary everything and everything going on.
Anthony.
Yeah, go ahead, John.
I am going to send you right now a link to something on Twitter.
All right.
I think might be interesting to inject into the conversation.
All right.
I'll CC Keith on it as well.
All right. I'm excited.
All right. This was on Twitter this week. Maybe put it on the screen.
I'll see if I get it up here.
Because it's an interesting, these are some screenshots of people who seem to me, okay, to be supporting the current system of citizenship.
Okay. Let me check this out here. Let's see if I got it. Still didn't get it yet. Still, oh, there it is. Okay, there. All right. Just give me a second here.
You may have seen this. I'm pretty sure Keith would have seen it.
All right. My landscaper isn't drowning out. I hear, oh God, they're getting to work early today. They're drowning me out here. Hopefully it's not getting picked up too much here. Let me, all right, let me get this link up here. All right, wait. All right, I had to switch it over to my other email account. There it is. Okay, I should be able to get this up now shortly. All right, we're getting. Hang on, Sam. Oh boy. Yeah. All right, here. All right, so let me get this one up here, John. Okay, so this is the one from Fabian?
Yeah.
Oh, the one from the other day. Yes.
Yeah. So this is interesting. And I think it fits into our discussion rather well here. So, you know, as you know, there's discussion about whole issues with the community of Americans abroad. And, you know, I made this point for years that the biggest problem with Americans abroad, not even the U.S. government, because, you know, sort of a lack of unity here. But is it possible? Where's the background noise?
Yeah, that's me. Sorry, hang on a second. Yeah, that is my landscapers here. I'll block that out.
Oh, okay. But here's he's got some screenshots up here, right, of people who are objecting to citizenship taxation, and this is interesting, right? What the reasons for it are. I mean, you can see some of the replies to his tweet. You know, I put a few replies up. Maybe go to them, okay, because I include the screenshot, you know, in them as well. But you know what you'll see here is, you know, a decided lack of principle, right? You know, which is, you know, remember my point a minute ago. It's that people are afraid that a change might negatively affect them, even if it's bad tax policy, right? So I think we see a good deal of this, right? I mean, look at this first one. I don't mind hearing what you have to say, but it's a two-way street. My daughters with young children get quite a nice check from the IRS when the U.S. reward, but they don't pay enough to pay actual taxes. That doesn't sound like a two-way street to me. Okay, that sounds to me like somebody who's just getting free money from the U.S. government without paying taxes. You know, my personal view is that that's a good argument to get rid of citizenship taxation. I mean, why should the U.S. be, you know, sending money, you know, social benefits to people who don't live in the United States? I mean, this is madness. Don't you think?
Yeah. Yeah. Like the COVID stimulus checks.
Yeah. I mean, I don't think. I mean, obviously, you know, for individuals, you know, I'm happy for them. But I mean, this is, you know, this shows, and I think that this ought to be focused on as part of trying to get rid of citizenship taxation. What is going on here? You know, sending money to people outside who don't, and they're happy they don't pay taxes, right? Good God. I don't understand.
Yeah, he's taking an argument. You know, he's taking an argument against citizenship taxation and saying, "Well, hey, it's a good thing." Like, what? I mean, this is insane. And I think that, you know, the bottom comment is what is just disgusting. That's disgusting, and that's a disgusting attitude to have. You know, just like, hey, I file every year. I also receive Social Security every year, and it's a small price to pay. Small price to pay. a small price to pay for your particular situation and your particular issue. And by the way, you might not be in compliance and you might be subject to horrific penalties and you're too ignorant to even know that. And that's the thing. You have people supporting systems they're not even close to understanding. Not even close to understanding.
Well, Anthony, again, see, my point on this is, of course, they don't understand it, but people don't want change if they think it might leave them worse off.
Yeah.
In this particular case, I mean, this person might even be better off, depending, because if you're a non-resident alien receiving Social Security, you may not even have to file a tax return at all. I mean, we don't know how it's going to be taxed, but I mean, it shows you just how very much the problem here is, dealing with the masses who are just afraid that, something might get worse. But have a look at the other one, the larger screenshot. I mean, this one was very interesting. Now look at this. This is puzzling. This is an objection, or an endorsement of citizenship taxation. What if one has U.S. source income? Why should I let foreign governments tax that, and usually at confiscatory rates? I cannot understand how that's related to the citizenship taxation issue. I mean, it's a completely.
I think they think that, yeah, this is a complete misapprehension of the law.
Yeah,
because they're assuming that if it switches to residency-based taxation, then it's reversed. Then this is the level of ignorance.
The assumption is that the only country that should be able to tax U.S. source income is the U.S. or something like that, or only U.S. citizens. Or I don't know what it is, but it seems to ignore the fact that wherever this person lives as a tax resident, I mean, unless there's some sweet tax treaty like the way there is with the French, right? That person's going to have to pay tax on that U.S. source. So I don't know. I mean, I think what this shows you is how difficult it is to have any rational conversation about this, and why nobody's interested in general. They're just interested in their own situation.
Well, I think it also shows, and if I may be a little bit provocative on this, and I don't mean any disrespect, but by even posting these things, it shows the level, even from the person posting it, the level of lack of understanding of what citizenship-based taxation is. You know what I mean?
Well, it includes that, right? And as a reminder, what is citizenship taxation?
And it's hard to understand, so don't get me wrong. It's hard to understand, but...
Well, so citizenship taxation is the U.S. Imposing taxation on people who don't live in the United States on income that was sourced outside the United States. I mean, that's all it really is, right? Citizenship taxation is the U.S. taxing people who don't reside in the United States on income not sourced in the United States, right? That's all it is. And it's very, so you have these people opposing change to that because, they feel they benefit under the current system, right? I mean, if you were to ask the super wealthy in the United States, would you support a change in the U.S. tax system? Some would, but I bet a lot wouldn't, because they acquired their wealth under the existing system, right?
Right.
And I think we have such a big problem now, and this is my, and because we're about out of time for today, and here's my silver cloud to all of this. Here's my silver cloud, because there's never going to be any meaningful reform. Washington, D.C. will never reform itself. It's opposed against us. Its job is to lie to us. Its job to lie to us and take our power away. So the idea that we can actually affect change through some political process of our tax code is silly. I don't think it's going to happen. Where can the change possibly come from? Well, here's where the good news is. Because the income tax and the Federal Reserve were created in weeks of each other. Again, we don't really have a taxing regime. That's not what they're there for. They're there to destroy revenue. So it's a 1-2 combination with the Federal Reserve is the IRS. You actually can't separate the two. They're actually a package deal. We often just focus on the IRS because that's sort of the way we're trained to, but really it's a package deal. Well, here's the good news. Here's the good news, folks. The US dollar is no longer the undisputed reserve currency of the world. We have BRICS. So that's fantastic. The Federal Reserve just lost a bunch of power. And moreover, the Federal Reserve doesn't look like it's doing so well that it might have stolen too much from us already, and there's not enough left to steal its voracious appetite. So as we're watching this, one of the greatest things that we could hope for is a complete destruction of our monetary system. Really is, because with that will go the IRS, and that's pretty much the only way I do it. Now, in its wake, it's going to be scary. It's going to be awful, but in its wake, we have the opportunity to create a tax regime and a sound money with a tax system that people actually agree with. And that is where I look our bright future is. But however, it is going to require a complete collapse of our financial system, which actually the Federal Reserve and IRS, they're actually doing a pretty good job at it. They might be doing our work for us. Now, again, we just got to brace and hold tight for this incredible culmination of things that's going to happen in a real reordering of the world. And that's what I'm looking at. I'm actually excited about it. That's where I'm at. That's where I think the real hope for. Keith, do you, what action do you think people should take other than waiting for the apocalypse that I'm doing?
What action should people take?
Yeah, people have to suffer. Yes, people. Well, and I think this is where we're going here. Is that look, a lot of people right now, they're suffering with their unique position overseas, and so what we do is we invite them. You're so scared about this, and again, it's information overload, Keith. They're designed not to understand it, but that's why you're there, right? That's why you're here. You're here to help people kind of figure out what they should do if they're overseas. Or you should help them figure out what they should do. Is that right?
Yeah, I mean, that's what I did with a gentleman and his son yesterday, was just kind of present the different real options for them so they can make an educated decision on the best option to move forward and to have a strategy, whatever that strategy may be. It gives some semblance of a framework on a very complicated situation.
That's right. And Keith, here's your email. People can reach you right here at US_overseas_advocate@outlook.com. And as we've been talking today, John Richardson is one of his quotes, all roads lead to renunciation. And that's for the person, because we've gone over the different type of expats. Look, there's some expats that's not their concern, because the tax system isn't killing them. And the threat of it probably won't, because their financial systems in the United States, or they're just temporarily overseas. But if you are that American overseas who's, boy, this is not looking good, I would suggest you read out to the great John Richardson at citizenshipsolutions@proton.mail to help you with his renunciation. And boy, if you followed this channel, you know how complicated it is and how many different things you might be saved from an exit tax, even when you should have been. There's so many nuances to it. You really need an expert like John Richardson on top of you, helping you out. And also, if you do have an international tax issue, you can reach out to me, schedule time to speak at irsmedic.com offshore. And I just want to leave, because there was one more comment that came over that I'll leave and freak off. Hopefully, okay, my landscapers, I'm going to kill them because they're really loud right now. The American Civil War was destructive and scary, but had some positive outcomes. Okay, I want you to go research Abraham Lincoln. And actually, that comment is actually inflaming me, because you should know better than that. Here you go, because we have just the pure MCLO. Let me get that link for you. Here you go. Here's your homework. For good and for evil, the impact of taxes on the course of civilization. Go to this. Get this on Amazon. Read this book. Go right to the chapter on U.S. taxation. Read that chapter and come back to me if you think there's anything good that happened in the U.S. Civil War, aside from the complete destruction of humanity, the complete destruction of any semblance of individual rights. Go there. So that is your homework. Again, I want to thank everyone. I want to thank my landscapers for doing such a loud, thorough job today. This is Anthony Parent of IRS Medic. I want to thank everybody for watching, and be sure you subscribe and turn on those notifications so you know when we go live. Thanks for watching.